This just in. Switch to Outsurance and save on your car insurance or ask for up to 1,500 Rand. News Leader, proudly brought to you by Outsurance.
Northam Platinum is cashing in on a platinum price boom, handing shareholders a record 2.8 billion Rand dividend, more than triple last year's final dividend. Now, the ramp-up of the miner's Eland assets is driving momentum across the business. Company CEO Paul Dunne joins us now to break down the interim results. Paul, thank you so much for your time today. Kicking off the financial year pretty strong, but before we get into those numbers, I'd like to get your thoughts around the precious metals rally that we're currently seeing. Do you see this as a cyclical spike, or are we entering a structurally higher mid to longer term pricing environment?
Yeah, I do believe it is a structural change in terms of the way metals are being priced, reflecting what has become quite a tight physical market. So it is quite fundamental, not necessarily as speculative as perhaps you may think in the first instance. This is really about industrial demand meeting a tightening supply, causing a positive price reaction.
And let's get into the period that was then really strong. Revenue up 60%, operating profit up more than fourfold, and a record dividend. So your shareholders will be smiling all the way to the bank. Take us through that period, of course, being boosted, but what we just highlighted there, the high PGM prices.
Yeah, it's, mining is, I think you know, and the viewers know very well, mining is a tough business.
Yeah.
It's a higher than average business risk, and it is rarely that, shall we say, you get a full house or everything going well. In this period, we've had a very strong safety performance, very strong production performance, solid cost control, good project execution, and that's been matched by a positive market. And that has enabled us to deliver a headline earnings number of just over 15 Rand. And the board has opined, and we see a good future here and a good second half. And on that basis, we've recommended and have been put forward a 7 Rand dividend as an interim payment for shareholders. I do believe shareholders will be satisfied with that payment. Given where we are in the spot market relative to the past 6 months, the second half could well be stronger.
Let's get into the operational performance. You did touch on it there. I'd like us to chat about Eland in particular. Is the asset now de-risked, and how material will it be in terms of output and costs over the next few years?
Yeah, building a mine is also an arduous undertaking, very laborious, quite sequential in nature. We can only take one foot in front of the other on any one day. And the Eland ramp-up now is 60% complete. So that's good. I mean, to get to the 60% level is quite an achievement in itself, but we still have 40% ramp-up to go.
Yeah.
And that will happen over the course of the next 3 years. So still a lot of heavy lifting. From a production point of view, we will produce around 90,000 ounces this year, midpoint of guidance, but full production is 150, and that will happen by 2029. So still some way to go.
So I'm assuming that CapEx will be put aside to ramping up that operation.
There's still some CapEx, around about 1 billion Rand left to spend cumulatively over the coming years. But we are beginning to break even at the 60% level, and that's a good place to be, because we begin to generate cash from here as opposed to absorbing cash from the group balance sheet.
Yeah. I mean, at the top, you touched on how difficult it is to run a mine. And one of the difficulties comes through expenses and costs, particularly when it comes to energy, Paul. And there's been a big shift to renewables at Northam with your solar and wind projects coming online. When do you expect those renewables to meaningfully bend your cost curve?
Yeah, the first 80 megawatt PV plant has been completed at Zondereinde. and we have wind and PV still to come in in early 27. So the full benefit we will feel in calendar year 27, and what that will mean is that at that point in time, 60% of our energy requirements as a group, in other words, kilowatt hours, will be met by the renewable sources of wind and sun rather than from Eskom. And that has material effect on our cost of power. It will reduce our power bill by 1 billion rand annually and cumulatively.
Really a very topical conversation. We do have Eskom, or rather the Minister of Electricity, with an announcement later today to chat to us around tariffs for the ferrochrome players. So we are seeing issues around high electricity prices really hitting some of our local miners. Before I let you go, then, you've spoken about aging shafts and years of underinvestment. I'm wondering how tight global PGM supply really is, and how long could that consistent constraint rather realistically persist, Paul?
If I could use platinum as a proxy for all the metals, or the basket of metals that we produce, we see platinum in a very persistent fundamental deficit of 10% before investment. And that is an extremely tight market.
Yeah.
Can it be relieved? Of course it can. The price would need to incentivize metal to return to market from the investment space. So there are still 3 million ounces of platinum in the ETF. We think there needs to be a price incentive in the first instance to draw that metal back to market. And a similar price incentive would then promote mining investment to help the miners replenish what we are depleting, and perhaps give some greenfields project work back into the mix, which I do believe is now needed into the next decade.
All right, let's leave it there. Paul, thank you so much for your time and taking us through the 6 months that was for Northam Platinum. That was Paul Dunne, CEO of Northam Platinum.
Breaking news. With Outsurance, you always get something out. News Leader, proudly brought to you by Outsurance.